In this video we are going to talk about highest paying monthly dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. Utilize these stocks that offer dividends regularly to secure consistent income. On Wall Street, there are never any definite things, and in 2022, when there is so much uncertainty, it is especially difficult to have trust in your portfolio amidst all the unpredictability. You never know what may ignite the next sell-off, which could be anything from sky-high inflation to a continuation of the turmoil in Ukraine to an increase in interest rates. When the market is unstable like this, investors place a high value on dependability. And right now, there are a few stocks that pay monthly dividends and have a proven track record of making consistent payments. These stocks also offer excellent yields, which range from a minimum of 5.3% to as high as 9.9% based on the current price of the company. In addition, some of these picks have continued to rise in value despite the fact that the major indexes have experienced steep falls. Take into consideration the following stocks that pay monthly dividends and are available for purchase right now if you are interested in dependable income and alternatives to the typical large-cap stock. EPR Properties, ticker EPR. EPR is a stock that has a lot of value to offer investors. To begin, it is a real estate investment trust, more commonly known as a REIT, which is structured as a commercial real estate company. The nature of EPR's business structure requires that the company return 90% of its taxable income to its shareholders, which leads in a requirement that the company pay out substantial dividends. As we go past the COVID-19 travel restrictions, it also has some great growth ahead of it because all of its properties are entertainment-oriented sites such as resorts, theaters, and other lifestyle properties. These types of facilities are in higher demand than ever before. The fact that this stock has increased its dividends by 10%, taking them from 25 cents monthly to 27.5 cents monthly as a result of the possibility of improved business operations, is the frosting on the cake. EPR stock is one of the few firms on Wall Street that is actually producing a gain year too far, and this performance, along with a hefty yield, makes it an excellent candidate for consideration as a top monthly dividend stock. Horizon Technology Finance Corporation, HRZN. If you don't want to chase a stock like EPR, which has become a bit of a crowded trade recently, the alternative is a company like Horizon, which may have a lot of long-term income potential even though 2022 has been a decidedly difficult year. If you want to learn more about this topic, check out the links below. As the name suggests, this company offers debt and equity investments to emerging technology companies. However, a risk-off atmosphere has generated headwinds, and the company's share price has dropped by more than 20% since the beginning of the year. Despite this, management is continuing to produce, and the company anticipates double-digit increase in revenue for both the current fiscal year and the following one. In addition, it has expanded into the medical technology and green energy prospects markets in order to broaden its scope beyond the more conventional technology plays. There is a significant amount of risk involved, but if you are patient enough to wait out the existing difficulties, there is also a significant amount of yield available at the current pricing. LTC Properties Incorporated, LTC. LTC Properties is focused on healthcare facilities, such as senior housing and skilled nursing facilities, and considers these to be among the investments with the lowest levels of risk that can be found everywhere. Despite the fact that the stock suffered some losses as a result of the epidemic, this investment has proven to be quite stable over the course of the long term. After all, an enormous tailwind is behind the fundamental business of this stock attributable to the demographics of the United States, which show an older population of Americans who will require more care later in life. The consistent growth of the long-term care industry has helped LTC achieve a modest gain so far this year in contrast to the declines experienced by other, riskier equities. In addition to that, due to the consistent flow of cash from the residents who utilize its services, the company is able to provide a large and long-term dividend payment on a monthly basis. Main Street Capital Corporation, Maine. Main Street Capital is a monthly dividend stock that functions as a lender to mid-size companies. These companies are typically too small to attract the attention of major Wall Street names, but too large to easily access ample credit at their local bank or credit union. Main Street Capital is a stock that pays out a monthly dividend and operates as a lender to mid-size companies. Maine helps these companies finance their expansion and continuous operations by providing them with debt as well as direct equity investments. Too far, Maine has invested in around 200 private enterprises to achieve this goal. The company has underperformed the S&P with tongue sticking out 500 so far this year, but it has a high-quality portfolio, and there is a possibility that higher interest rates will be applied to its debt offerings. If the dust settles, this stock may be able to make a comeback thanks to these factors. In the meanwhile, the firm's monthly dividend provides shareholders with a cause to maintain their patience and continue holding on to this asset. Pembina Pipeline Corporation, PBA. Pembina is a Canadian energy infrastructure firm that is responsible for the operation of natural gas and crude oil pipelines, processing plants, storage terminals, and export facilities. Pembina has climbed in kind, up more than 20% year to date, even as many other companies have melted down. This is despite the fact that 2022 has been an exceptional year for energy stocks. The robust midstream energy business that it operates, which acts as an intermediary between enterprises that specialize in the production of crude oil and the wholesalers and refiners who are located at the end of the supply chain, is the primary factor that attracts income investors to the company. The profit margins in this industry are lower, but it is generally more reliable and steady than others. This enables it to pay significant monthly dividends, which are anticipated to remain consistent regardless of the ups and downs of the price of crude oil. PennantPark Floating Rate Capital Limited, PFLT. PennantPark is yet another stock that pays monthly dividends in the financial sector. It is organized as a business development company, sometimes known as a BDC, and it uses the opportunities it identifies to guide its decisions regarding debt and equity investments in small businesses. Due to the fact that these smaller enterprises are frequently not rated by debt agencies, this needs a significant amount of research and specialized knowledge. On the other hand, a higher risk profile means a higher rate of return on investments that are successful. In addition, the phrase floating rate that is included in the name of the company alludes to the ability of this monthly dividend stock to capitalize on higher interest rates as the broader environment moves in that direction. This could result in a potentially larger income stream over time if the trend continues. Stellus Capital Investment Corporation, SCM. Stellus is one of the smaller stocks on this list, having a market value of just more than $250 million. It is also one of the smallest companies on the list. On the other hand, sometimes the most significant things come in the smallest packages. This company's shares have remained extremely stable in 2022, as seen by the fact that their current valuation is identical to what it was in January. In addition, SCM just recently raised its payout, increasing it from 9.3 cents per share paid in monthly dividends at the end of 2021 to 11.3 cents paid in monthly dividends in each distribution this year. The asset manager primarily invests in private middle-market companies and has built a diversified portfolio that includes companies in the media, manufacturing, packaged food, and healthcare industries that continue to deliver generous and reliable payouts to SCM shareholders. These companies are able to do so because of the asset manager's focus on the private middle market. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.